So in today's video, we're going to talk about a buy and sell indicator that doesn't give you buy and sell signals, but it gives you an obvious kind of element of momentum. This works on any time frame. It works with investing, it works with positional holds, it works with day trading a lot. It's just a bit of common sense in terms of momentum, okay? Let me explain in more detail. Now you need basically a couple of things on your chart. You need an RSI, Relative Strength Index. It's at the top here. This is how I set mine up. Go to indicators, put in RSI, you click on it, and then it'll add to your chart. It's very straightforward. I remove the moving average element to it. What I do is I like to change mine to 7. I like it a bit faster than the 14. It doesn't really matter too much, but it gives you a little bit of an indication. You can change this to however fast you want it. Doesn't really matter. Let's be honest, as long as you're finding divergences, as long as you're looking for momentum in terms of the trade, you're all right. Now, with that being said, I like to keep mine nice and simple, the purple sort of background, but I also like to emphasize the fact of this middle area. Huge. We will come on to that in a second. The other thing that you need now, this can vary between your style and your trading strategy, but you need some sort of momentum indicator on your chart. Now, these are both lagging indicators. It's an EMA, right? Now, I like to use the 8, which is kind of obvious because it's one of the most obvious ones, and the 21. So this is 21, and this one here is the 8, the one closest to the bodies of the candles. Now, when we look at something a bit more naked, you can kind of see what's happening in terms of like momentum. Now, I'm not going to throw too much shade at people, but a lot of influencers could have saved a lot of pain by looking at the higher time frames and looking, when should I be doing certain types of video? Should I be telling people to buy into certain assets on these higher time frames when the momentum is below a certain point, when we're below moving averages, when everyone's saying buy now, 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 buy now. You get the idea? So yeah, got to be somewhat careful. Now, the one thing that I will say with this is you've got to go with momentum. We're not talking about sniper entries. We're not talking about trying to get in on the absolute wick bollock of a candle. You're trying to follow where the market's going. Now, one of the things that I heavily believe in cryptocurrency, especially hype, fear, greed, right? Why? Because when you look at these higher time frames, you can see how market momentum runs up for quite a while. It's like the stock market, it runs up for a while, and then it also does the opposite. It runs down for quite a while. You can follow these positions without too much worry. You know, there's assets like this, relatively new, came out, but have failed to kind of remain above certain areas. As I say, below the 50 on the RSI, starting to go into the bearish zone. Below the moving averages, not been above them for a very long time. You could have been holding a position for months. This is what we're talking about, finding positions when it is telling you your bias. Do I go long today? Do I go short today? Am I trading this weekly level on a bearish trend or a bullish trend? You get the idea? So that is one confirmation element ticked. By the way, if you like this sort of content, leave a like. We're going to be looking for more traders. So if you like trading, you want more trading content, hit the like button, hit the follow button, subscribe button, whatever it may be. Right. So that's the nucleus of it, right? The nucleus of it. But how do we find those better entries? Now you're probably wondering. So as I said before, the first thing you need to do is look at the RSI and look at the moving averages. What is genuinely happening? If you want to go a little bit deeper, check out Premium. You can learn more about the structure of a chart, but we will delve deep into that just in a second, right? But when we're looking at overall bias, and this is where it gets important, you need to see where the charts are leading you. So we've got this obvious top. We had a pullback and it retraced and it rejected here. You're starting to form essentially a bearish trend where the market is pulling up, but it's creating lower highs, right? Those lower highs then lead into lower lows. And then what you're actually getting is, where is it? There we go. The moving average is starting to go over it and you're starting to fall, and that is then acting as a level of resistance, right? That is kind of hugely important in terms of where we're going to go next. Problem is, where's your entry point? Well, This is where levels of support, levels of resistance, levels of Fibonacci come into play, or even trend lines, stuff, but obviously you can vary this to your own style. So when we're looking at Ethereum here, we have got a little element here where we are below, for the first time in a while, the 50 on the RSI, right? That's a given, right? Another area that we're looking at as well is the fact that at this candle closure here, we've closed fully below both moving averages. It's kind of important to note. What you're actually waiting for is a pullback into levels of demand or a level of supply, whatever direction you're going, and you're trying to figure out where can I enter. Now, this is the best thing to do, in my opinion, is look to the left. Now, if you look to the left here, you have a lot of congestion around this zone where it's actually been in for quite a while. Now, if you just plonk a horizontal ray across there, it's kind of obvious when you see that on this asset. It's super straightforward. And what actually does happen, it pulls right the way back up into the moving averages, but it also becomes a level of huge resistance all the way across into this zone. So you're looking at an obvious zone where, you know something, this isn't a bad place to sell because momentum has got, is broken down, and that breakdown is leading to a potential sell-off. So if you're looking at a zone, put a little box around it thinking, well, there might be a lot of selling pressure around this point if this area is fully lost. What happens is we lose the area, it goes back and retests it, and it properly sells off from that point. So you can see where market momentum, when a breakdown has happened, is hugely important. So again, going back, you've got your bias. Your bias is telling you, well, we should be looking at shorts. We should be looking at a potential breakdown. Once it happens and we had a retest of that breakdown, we can then follow the momentum. And regardless of how you want to look at this, you have an impulse in this daily time frame which does pull up into the EMA. The EMAs are a weaker level of support and resistance, so bear that in mind. It's great for showing what momentum is though. When it goes and drops quite a bit more, a lot of FOMO would have happened, but it does go and retest that level, which is a very important factor. You don't want to be sweating thinking, wow, I could have sold here, but it actually moves up against you. So you got to be somewhat careful. And again, if you're looking at that area, there's no reason until maybe this point here, potentially, of being able to get out of this trade, because the reason why I say that is because it has actually created a higher low, but you still are below both moving averages. So hugely important to know where it is going. Now, again, when we talk about this can also be applied in the stock market very simply, right? This is Apple. It's looking horrible, but huge momentum to the upside, above the 50 for a long time, above the mental. Melted, pulled back, lower high, and we might be creating new lows here. Again, we are below 50%. We are below the EMAs, and we're potentially at a level here where it could break down. This may well break down, and you may well test this as a level of resistance. You may well look to short from that point down to this level, potentially down to this level in terms of the overall spectrum of the play. It's not the greatest of plays, I'll be honest. I'll probably do it from the top here into that region, but you can get the idea of terms of where it is. Looking a little bit ugly, but overall, as I say, this can work on any time frame. You can do this as a trading point. You can do this as an investor. It's entirely up to you, right? So looking at an example on the lower time frames, let's just look at, say, Polkadot on, say, the 1 hour time frame. If you wanted to do similar sort of stuff with this, it's the same sort of bargaining chip that you want to look at. So what we've got here, we've got levels of interest around these points, because what it is actually doing, this is creating a little bit of a trend. It's a bit loose, I know, but you can see the idea here. We've got a series of high lows, right? What actually happens after that point is there's a breakout of structure around this point here where we've got a lot of bodies. It pulls back into a level of resistance, or breaks through the resistance, into a level of support, and then it continues going higher. This is going way above that 50 point now, which is always good to see. I'll zoom in a little bit so you can see it. So let me just annotate that a bit better. So let me explain. Level here, right? Resistance, support, but it's also been resistance. It's also been resistance here. Huge level, right? It broke down into this level. It created a higher low, which is good for obvious reasons, but it broke out and did a massive aggressive pump from that point. It then pulled back into this level here, and it created a new level of demand from this point, right? So this is kind of where it gets important, where this is a previous one. You should be looking at potential longs here because yes, you are above the EMA. You're above both at the EMA, sorry, and you're also above the RSI 50. This is on the lower time frame, so you can do the same thing. And it rides all the way up, all the way up. It actually creates a slight, it's not the strongest, but a slight bearish divergence. But ultimately, it then pulls back and then starts to grow a little bit bearish. So you can see how on an intraday time frame over a couple of days, you can actually ride these with momentum. Again, you can do this on any time frame. If you are an investor and you're looking at this sort of strategy, you can, do whatever the hell you want realistically, right? XRP, for example, you can buy at the certain points where it's above certain points on the weekly time frame, for example here. Follow the momentum until you feel that it's, too good to be true. The problem with this on an investment side of it, you need to make your sell targets obvious. Because if you're waiting for something to change in the charts, like an EMA crossover or something like that, you're going to be miles behind from it. So make sure you have some levels set for investment profits. It's a very, very important factor. In terms of us as a trading community, check us out. Links below in the description. We're using BingX at the moment for trading because obviously Bybit has been removed from the UK. It's pretty much the same thing. So if you want to know more, check out the links below. There's some huge discounts on there. And yeah, I'll see you in the next video. I know it's been a while that I've been featured, but here I am. I'm alive.